Hello and welcome everyone to Gold Asset of the Day for the 13th of July 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, a big welcome to all of our new clients at the Gold and Silver Club. As you know, last week we took the week off to onboard new members at the Gold and Silver Club. We discussed this with you on our previous report that we would be taking this week off in order to onboard new clients to our private mentorship program. A final note, we're now 6 months through the year. The next commodity report, that is going to be on Tuesday, the 12th of July. We've been inundated with applications at the Gold and Silver Club. So many of you have been in touch, which is absolutely fantastic. There won't be a commodity report this weekend. Next week as well, Gold Asset of the Day and also Thursday's commodity report. They will be on pause next week. So I wish you all a fantastic week. Good trading as we head into a new quarter, into the second half of the year, and I look forward to see you back here from Tuesday the 12th of July. So with that, I hope many of you had a very profitable first week of July. As is the case, many of you are aware of this that follow our commodity reports over the last few years. They're typically over the first week of July after the Independence Day public holiday. This is where, during thinner liquidity, you can see more exaggerated moves in the market, which sets up perfectly to capitalize on the second half of 2022, buying at the lower end of the ranges where we've seen big opportunities on gold, breaking all the way back down towards that 1725 zone, silver breaking back below $19 per ounce, and also oil breaking back below $100 per barrel. In fact, last week, we took the opportunity to sniper into 4 trades on crude oil, and within 24 hours, over a 2,400 point move that we were able to bank with our clients at the Gold and Silver Club on this current volatility that we are seeing at the moment. And again, this week we have the CPI data coming in on Wednesday. This is going to create more opportunities, and also you want to make sure that you're going to be set up now for the second half of the year, which traditionally Q3 and Q4, these are some of the most profitable times of the year to be trading the commodity markets, especially if you're patient and you're aware of the typical liquidations and big sell-offs that we see in the commodity markets into the first week of July after the Independence Day public holidays, where you have thinner liquidity in the market. This, of course, provides exaggerated moves where you can get much lower prices for commodities. Now, as it relates specifically to gold at the moment, we're seeing areas of liquidity here, 1730 down towards that 1700 level. At the moment, very sticky around that zone. Each time we pull back down to that layer of support, gold quickly gets a bid. Non-farm payroll was a great example of that. Gold broke down to 1725 and then very quickly broke out to 1755 and then continued to consolidate into Friday's close around the 1740s. So again, at the moment, we're seeing lots of support, that 1700 area up towards the 1730 level. At the moment, gold very sticky at the 1720s. With respect to hedge funds and money managers, in the last week, we have seen a slight change in the overall net long position with gold, but overall hedge funds do remain net long. Over 55% are currently long this market. However, with crude oil, we have a bigger percentage of hedge funds that are currently long this market. It's over 80%. Now, as it relates specifically to silver at the moment, I do see big support coming in below $19 per ounce, down towards that 1850 handle at the moment. Each time we dip below $19 per ounce, silver spends very little time there, but I wouldn't be surprised to see further exaggeration in the markets over this week, especially given that the dollar index has broken out to 20-year highs and essentially on Tuesday met the euro with parity. So you've got the euro and the dollar trading at parity on Tuesday, with the dollar breaking out to 20-year highs. This is in fact putting pressure on commodities priced in US dollars. However, commodities priced in euros have broken out to multi-month and multi-year highs. Great example of that is oil at the moment, trading in euros, breaking back out to multi-year highs. However, priced in dollars, it's traded back below $100 per barrel. I do perceive opportunities here on oil, especially when it's dropping back below 97 and 96 US dollars per barrel. Expectation is that we won't see energy prices spend too long at the lower end of the ranges here, but we're bound to get further volatility over the course of this week. But as it relates specifically to gold, I expect the CPI data to be a potential catalyst. Last month, the CPI data, we saw gold break out 500 points to the upside within 24 hours after that data, but we did get a pullback in the lead up to the CPI data and a subsequent breakout afterwards. So I'd certainly watch out for more volatility. The name of the game is to continue to bank into strength, be nimble in these markets. It's not a buy and hold market at all. You want to make sure that you're regularly coming in and out of these markets, banking into strength, regularly locking in those profits, then you can reload at much lower prices. This is really the trick to trading the commodity markets at the moment. Take advantage of that range-bound price action and then the slingshot moves higher that we typically get over Q3 and into Q4 as well. So this time of year sets up perfectly for the second half of the year, and these prices are really a gift to take advantage of the price action over the next 6 months here. So again, with gold this week, I'm looking at support 1730s down towards that 1700 zone. And again, if you would like to join our private mentorship program, if you would like to learn our research-driven approach to the market, ditch those gimmicky indicators and outdated technical analysis strategies, and utilize statistics, data, market intelligence, you further want to compound that with knowledge of the capital flows in the market, learn and understand the daily, the weekly, the monthly, the quarterly cycle for each commodity, alongside that, the intermarket correlations, the ratios in the market, and of course the geopolitics, the fundamentals, the intermarket correlations, the ratios in the market, the key areas of liquidity, and how the hedge funds, money managers, and banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.